Chairman Hill, welcome home.
Glad to be in Nashville, Vegas.
Nash
And I'm
Vegas.
not even a bridesmaid.
Not going to see you downtown later on one of those buses going by now?
I don't do $35 for a scotch and water, but that's you can go to the Gulch and find one. Absolutely.
Well, I believe you graduated from Vanderbilt in 1979 with an economics degree. Back then, when you were a student, did you have any aspirations at all to be in government, to take on a public service role?
You know, I don't think that I did, but it was at Vanderbilt where I really learned my appreciation for international business. I had an amazing professor in the history department who was Korean. He was a Korean American, and he taught every summer at the Getulio Vargas Foundation down in Rio de Janeiro. He was a Spanish and Portuguese speaker and an expert in Latin American economics, which is really got me interested in Latin American economics. So I took all those classes. And Vanderbilt at the time was famous for its economics department among all the schools and finance ministries in Latin America. So I really, at Vanderbilt, connected with international business, which I've been in and out during my career. And I'd say in macroeconomics, I really fell in love with the idea of how government's responsibility worked. And I developed my, say, conservative political leanings while at Vanderbilt in terms of in the mid-'70s, coming out of the Ford and Nixon overspending and the recession following the oil crisis, and the Carter administration was the beginning of actually deregulation in the country. And so we had speakers on campus that really inspired me. Phil Crane, who was a member of Congress from Chicago at that time. His brother was in Congress as well. This is before Phil Crane got into trouble. You can Google and find out about that later. But Phil Crane had written a book about the sum of good government, and that was what we talked about when he was on campus here some 50 years ago, and it got me really interested in sort of that Jack Kemp, Phil Crane philosophical outlook that was pervasive in the 70s.
Now, back then, there were no crypto, blockchain, digital asset courses being taught, but now it's a little bit different. I think the times are catching up. I don't think there's, correct me if I'm wrong, Yesha, but I don't think there's any crypto-specific courses being taught, at least in the core curriculum, but it's much more of a sort of outside extracurricular activity, at least in some of these schools. But with Vanderbilt specifically, do you think, and other schools as well, but do you think that crypto now, blockchain technology, should be being taught as core curriculum in places like law schools, business schools, especially as it's coming into the policy conversation, as Congress is writing the rules, it's becoming such a big part of the emerging economy?
Well, as we've talked before, Eleanor, people always ask me, well, how did you get interested in distributed ledger technology or crypto or decentralized finance generally? And the real answer to that is I've always been interested in technology and how it reduces costs, increases customer service, increases accountability, all during my financial services career, including using technology to find new businesses and serve people differently. And I've done that twice in my career, where I've used the technology to essentially invent a new way of doing business. So that's always been my first attraction. But with that said, the answer is an easy yes, because converting a paper-based analog system to a digital system using our existing operating systems now can be done in a decentralized distributed ledger system. And why would you want to not study that in detail and compare and contrast those systems, the costs and benefits of them? And students need to get out of school with that knowledge, just like they need to have real use of AI and real use of cyber protection before they go into the private sector. So again, my attraction to it had nothing to do with Bitcoin or any digital asset per se, other than the Bitcoin white paper that demonstrated the mechanical success in a distributed ledger technology and the validation thereof. That's what attracted me. And I immediately said, oh, here are all the things we can do with that. So there was no squeaky wheel there. I was a forest guy, not a tree guy. I think a lot of people get into this, interested in this with a tree. Bitcoin might be a tree. It also happens to be a successful blockchain. Or they're they find something they're interested in. But to me, it was the system, and therefore I look forward to the competition. I think we're going to have dramatic competition in writing code and on the backs of different blockchains for different purposes, whether it's Ethereum or Avalanche or Bitcoin. And that's what's exciting to me about the future of this technology.
Mm-hmm. And you coming at this from a banking perspective as well, being a former banking guy, so you kind of get the whole ecosystem perspective of it as well. So before we get into the great stablecoin yield debate of 2026, I do kind of want to just take a step back and take a look at how we got here, because it's been 3 months in the making of the Senate debating over this issue that was really a genius issue, not a market structure issue. But there's two kind of competing schools of thought as to how we got here. The banks will say that Clarity was supposed to always revisit the issue of this so-called loophole, right, when it comes to stablecoin yields. Crypto will say, oh no, this was completely buttoned up in genius, and it was done, and we are now relitigating the issue. Which is the right narrative?
Well, you won't get me to answer that question directly.
I'm going to try.
Because I don't know that it has a direct answer. Honestly, we passed Genius in the House with a very solid vote, 300 votes in round numbers. That's very unusual in the House. We asked the Senate to consider some changes to Genius, which they verbally invited us that they would consider those. And we put those in Clarity. We passed Clarity with 78 Democratic votes in the House. So whether people think it's, there is no final, legislative proposal until it's on its way enrolled by the House and Senate on its way down to 1600 Pennsylvania Avenue. So I would say just because we passed that doesn't mean that senators don't have the ability to, sort through that, take new testimony, and think through the direction. So I'm just not stunned by that. We did pass that bill in July, and it's now April. So the part I would not characterize as it's 3 months debate. It's been a debate going on since, the middle of July last year, once we passed both Genius and Clarity. But I have every confidence that senators on both sides of the aisle know these issues. They've now come ashore on these issues. And to the audience that's not deeply involved in the legislative process, the House has been working on digital assets policy for 10 years and intensively for 6 years, so 3 Congresses, putting forward bills, debating those bills, taking those votes in the House committees, and going across the House floor twice. In the previous conference, we had an excellent bipartisan vote on my FIT 21 bill back, now almost 3 years ago. And then we had last year's vote on Clarity and Genius. So to some degree, the senators have to come along and go through the stages of due diligence and question answering. And that's how our system's built. So it's not for me to complain about that. I think it's fine, although time is of the essence, and so I hope that they can reach a conclusion soon.
Let me reframe the question a little bit. Are you surprised that this issue was revisited in Clarity and that it's taken so long?
I'd say no, based on the public positions of some people in the debate, where it's a challenging debate based on those public positions. I go back to sort of basic tenets. I'm a very practical, problem-solving type personality. We said no yield, but we also said that bank and non-bank issuers would all have the same compliance burdens, same capital requirements, same process. And the implication in FIT 21 and in Clarity was same business, same rules. So to me, that implies sales practices too. So if you're going to have sales practices around the use of a dollar-backed stablecoin, that applies to everybody, whether it's bank issued or non-bank issued, whether it's accepted on an exchange or not. And so I thought when the Treasury did their advance publication in the Federal Register about their rulemaking, they asked all those very basic questions. How should we think about this? And it implied sales practice concerns. So I'm not really surprised it's come back up, and I'm not really surprised of the character of the debate. But again, going back to my, founding roots in this topic, I think this is something that can be a solution can be found that is fair-minded to bank and non-bank issuers and people either in a decentralized use of a stable coin or a stable coin attached to an exchange. I just, it is, Charlie Munger would say, it is not in the too hard pile. This is a solvable situation.
Yeah, and while there's no announced deal at the moment, what we saw in the last, week and a half is that what probably is going to happen is something along the lines of a deal that looks like yield or rewards that are not going to look too much like a bank deposit, right? And that's something that you've personally been an advocate for. Retail, I think, would probably take the opposite view. What would you say to retail investors or to crypto Twitter, as it were, who are upset at what they see as Washington, quote unquote, selling out to the banks, or at least taking side of the banks, maybe in expense of stablecoin adoption or broader industry adoption, as they would say?
Well, again, I don't, the Senate debate may feel that way. I never saw an instinct of that in the House during our debate. I mean, I think we were technology oriented, neutral to a bank or non-bank issuer, and we tried to create the rules of the road, both in Brian Stiles' Stable Act, which was our House companion to Genius, or in Bill Hagerty's good work that you heard the backstory on this morning. I view, personally, this is my personal opinion, I view stable coins in some instances in a rich, developed country like the United States as a transitional product, not an end product. So when my bank tokenizes my deposit, why would I need to go to a third activity in order to complete a blockchain transaction? I don't think I will. I think I'll debit cash in my bank account and credit the payment on the blockchain and not require necessarily the conversion to a dollar-backed stablecoin. That would be different in a corporate cash management situation, potentially, a B2B transaction that's cross-border. It certainly would be the view outside the U.S., writ at large, and I think Bill did a great job this morning talking about the power of dollarification, and Bill Hughes did as well, of that value outside our borders or outside of a developed country. So I don't think there's a sellout here. I think there's an effort by the Congress to craft basic rules for the use of a dollar-backed stablecoin and market structure to facilitate innovation in America, to promote innovation in America, and that will inure to the benefit of a hardcore DeFi-only retail investor, or to the corporate treasurer's office who's trying to do a whole new accounts payable and receivable system on a blockchain globally that may settle nightly 7 days a week in a U.S. dollar-backed stablecoin. So I view this, I guess, much more cup half full, but I don't spend my day on X, so my attitude's a happy one.
Lucky you.
It's happy. Yeah, so.
Do you think payment utility alone for stablecoins is enough to encourage adoption over some of these banking products?
I think again, it's back to that use case. No matter, you've got to think about the appeal you're making to the corporate treasury at a big, Fortune 500 company with 50% of revenues offshore, about that functionality of it, and then how it might be for a domestic manufacturer who just wants to simplify a programmable contractual nature of making payments. So I think the payment aspect of it, I mean, I hate to say this, it was like the most attractive to me. I know that people are trying to build a whole enterprise around just the fact that, a dollar-backed stable coin, but to me it is an attractive, more competitive delivery of a payment. And I think that's going to bring down, see payment innovation and infrastructure will go up. Intermediary costs of making a payment are going to go down. Accuracy, fraud prevention, all the things that we think about will benefit from it. And I think that's a pretty significant use case. And I see a lot of people out on television saying, oh my God, I don't know what this is. But secretly they have like teams of people working on this to do exactly what I'm saying. So I'm not sure I believe everything I hear across the spectrum on this topic, because people do recognize it, that it has tremendous expense and compliance and programmable contractual settlement benefits.
Okay, so I got 5 minutes left with you alone, Chairman Hill, so I'm going to skip a couple questions here, but I do want to get to just general timing on what could be possibly the House getting clarity back. Obviously, we're looking at a Senate banking markup potentially at the end of the month, maybe Senate floor time in May, maybe later than that. But given the recent tensions with the Senate over the housing bill, are you expecting a smooth handoff and potential negotiations with your Senate counterparts around clarity?
Well, we have a good working relationship both with Senate Ag and Senate Banking on this issue, both at the member and the staff level. We've spent hours and hours over the last 4 to 5 years with staffs on both sides of the Hill and members on both sides of the Hill. And I think that that collaborative work will lead to, finding a landing spot for clarity. And we just are eager to continue the consultation work we do with the Senate process as they wrap it up, and then just hope that they can get it as completed over there as soon as possible so that we've got time to do the same in the House.
What do your members think about the draft that was released in January?
Open-minded. We noted there were a lot of changes made to conform with clarity as passed in the House, and so, it's a step. It was a step compared to some earlier drafts. It was a good step in the right direction, and like I say, I hope that Democrats and Republicans there can find a good landing spot.
And assuming clarity, or not assuming, maybe clarity doesn't pass. I'm not trying to put the bad energy out there, but if it doesn't pass, then what does 2029, in your opinion, look like for crypto in general and for the crypto market and maybe the overall market? Under
29.
Under we're looking in the future here. Under a Democratic administration, potential Democratic administration.
Well, first of all, I would say that implies that this bipartisan coalition that's come together over the last 5 or 6 years post FTX and post all the work done in the House and Senate under both Democrats and Republicans, that somehow you're implying that in 2 years of the House being Democratic and the Senate Republican, say, for example, that we couldn't re-up this bill after the midterm elections. I found that a false premise. I remind you that, Democrat leadership supported clarity and supported Genius. Nancy Pelosi, Hakeem Jeffries, Senator Schumer support having the rules of the road in a market structure bill, and they support a U.S. dollar-backed stablecoin. So I would first say that regardless of the midterm elections, if for some reason clarity does not pass, we're going to make every effort to pass it, starting in January next year, or in the lame duck session, depending on how that turns out. So I'm just not that pessimistic. And as to 2029, it depends on who's elected president. And I don't have a crystal ball, and, we'll have to wait and see.
Fair enough. But you think change in the House in November, that won't affect market structure if it doesn't pass before then?
I think you're going to irritate, almost 50% of the House Democrats if you shut it down.
All right.
So, I'm, again, demonstrating I'm a cup half full guy,
Yeah.
So. I went to Vanderbilt, come on.
All right, well, with that in mind, maybe we should invite another optimist up on stage. Rep. Timmons, come on up. What's your take?
I always use the story of Canon and Kodak as the analogy to where we are right now. So everybody in this room has a cell phone in their pocket that has a camera on it. Kodak obviously did not adapt, and they filed bankruptcy, and they currently have like $1 billion market cap. Canon did not file bankruptcy. They're currently about $40 billion market cap. So they adapted. And so what we're seeing right now is the Canons and the Kodaks trying to legislatively protect market share. And I think that that's a bad idea, because this is going to get solved somewhere on the planet. And we need to make sure that the U.S. is the center of the global economy. So I understand that the interests pushing this yield conversation are concerned about the future. I would be too if I was them. But be Canon, don't be Kodak.
I like it. And how do you feel about the potential change in say the Democrats
I've
take
been in
that
Congress,
back the House in
I've
November?
been in Congress now for 7 years and 5 months. It's like a reverse prison sentence, you know, when you got there. So I have seen, I have seen, you know, when I first started out under the second 2 years of President Trump's administration, this was just an emerging discussion. And once the Biden administration took over, and just whether it's regulation by enforcement or just outright antagonism towards the entire digital assets industry, it caused a pushback. And that pushback made this front of mind for everyone in Washington. And it is no longer popular or even advisable to be anti-emerging tech, anti-digital assets. If anything, it's do so at your own risk. So the world has changed, and I think both Republicans and Democrats want to get this right. They understand the importance of it. They understand that if we miss this, if we don't get it right, that the future is not looking good for us and for the U.S. economy. The world is changing, and it's changing for the better. It's creating efficiencies, and I couldn't be more excited about where that takes us. But the thought that we would not get this right and not get this done is just a non-starter. So we will get it passed, whether it's in the next couple of months or next Congress. It will get done, and we have to get it right.
You mentioned not advisable in there, and I can't help but think super PACs are on your mind there.
I was one of the larger recipients of outside spending, and I probably wouldn't be here without it. So not that I like my job very much. I actually don't like it, so they probably didn't do me any favors. But seriously, we've never in our country's history seen such extensive outside spending where they're just asking for rules. They're not actually, this is traditionally you have interests that are trying to protect market share or trying to pursue whatever objective. And in this case, the interests that are spending heavily in political elections just want rules. I mean, honestly, to some degree, they're like, we don't care. Just don't make us deal with lawyers, make us deal with laws. Because, I mean, the amount of money that was spent and the amount of growth that was stifled because of the Biden administration's approach to this was just incredible. And, I mean, we got to stop that.
Let me add to that point, because your Canon, Kodak moment was good. What if sometime in the 90s we said, well, we're not going to allow the Macintosh operating system to exist. We're only going to have Microsoft, DOS, then Windows. And government's putting their thumb on that scale. You just wouldn't do that. In fact, the whole decade of the 90s was the opposite, where we decided not to tax the internet, but to let the internet flourish, including bad stuff on the internet. At the time in the 1996 debates, it was all about, oh my God, this is just one giant online pornography thing. We need to shut it down, need to block it. And the idea was, no, we're going to let people code and develop companies and their businesses, and then regulate that business on the internet. And so I think you're so right that we're just trying to have rules of the road and let the private sector flourish.
I'm going to add one thing to that. So something that most people don't think about as one of the biggest benefits of this entire movement is I would argue it's going to pose a huge challenge to authoritarian governments, because China, India, Iran, Russia, you can't move money. You can't leave. You can't take it with you. So I always laugh when I walk through the airport and it says you have to declare over $10,000. I have a non-custodial digital wallet on my phone where I could have every dollar I've ever made, whatever. So the world is changing, and governments' attempts to control their population using traditional finance are going to be gone. And so that's going to be good. That's going to be positive, because people are going to be more informed. They're going to have more liberty, and you're going to see authoritarian governments not be able to control their populations. And I mean, that's just one part of it. The other part of it is information. Starlink is going to change the world as well, because when governments can't control their population's information flow, they can't oppress them. So again, we have done so much for the world in so many different ways. For us to get this wrong would just be really tragic. So we're going to get it right. We might trip and fall a few times, but we're going to get it right.
I want to just go back to Fair Shake and the PACs really quickly. Obviously, we know, as you mentioned, the influence that they had in the 2024 elections, and we're seeing a couple new super PACs and PACs, hybrid PACs, whatever, what kind of PACs you want to call them, popping out in the last couple days, couple weeks. I don't think you guys are going to be affected negatively by these PACs. Obviously, you're pro-crypto, you're here at crypto conferences, you talk all the time, and you've rolled out incredible legislation geared towards crypto. However, I would imagine some of your colleagues in the House are maybe a little bit worried about some of that spending. How seriously do you think that they are taking the influence of some of these PACs?
So I don't think it's a bad thing. I mean, don't get me wrong, it could be used for evil, but it has not yet. So I've had a dozen candidates in the last 6 to 12 months call me and say, I got to fill out this questionnaire. What does this question mean? And
Stand with
what
crypto
do I not want to say to answer this question? Because, I mean, a lot of it is education. And so all these candidates, one, they're just running for whatever reason they're running, but it has become a landmine that you don't want to step on. And again, I think the most important thing here is that they just want rules. They want rules, and this is the future. So for us to try to legislatively protect Kodak and Canon and not make them compete is insane. So, I mean, we've got to be the center of the global economy, and that's what we're doing. And again, I think it's a good thing. He's like, I don't want to answer that.
No, I'm good. I agree with that.
So you would say it's socially unacceptable to be against crypto?
Ill-advised.
And I would say, just, you know, a big picture point of view, the fact that people always try to connect big spending in the summer of 2024 with quote unquote, you know, a pivot moment in bipartisan, bicameral support. And I just always take the opposite side of that argument. I think it's the 10 years of work by people in this room, year in and year out, hour in and hour out, to come up and testify before Congress, send materials to read, meeting with staff, talking through the case studies of distributed ledger, the issues in and around crypto, and I credit Kevin McCarthy, our former speaker, Patrick McHenry, the former chair of the House Financial Services Committee, Lummis over in the Senate, Gillibrand, others who have been hardcore interested in this topic area for a long time, so that education had been delivered, and then we put votes on the board. We asked people to vote for Fit 21 2 summers ago of 23, right, Nick? 23. And so people were on the record, where are you on this concept? And they voted. And then when you're on the record, that gives you a chance for the political process to, you know, to speak. Because, well, now there are people that are pro-innovation and people who aren't pro-innovation. And I would say that they've worked mighty hard in that political activity to be bipartisan. And that's why the work we've done has been bipartisan in both chambers. I think it's a good thing.
Do you think it's a good thing that some of these crypto firms are now coming under the regulatory umbrella of entities like the OCC, the FDIC, the Fed? We're seeing multiple crypto companies now applying and getting approved for trust charters. We've got one company with a conditional Fed master account approval. Would you say it's a net positive that these companies are coming under, you know, regulatory guidance is not the word I'm looking for, coming under regulatory
scrutiny and surveillance.
Yeah, sure.
I mean, to the extent, I mean, this will, you know, to the extent that companies want to come into the payment space, be covered by all the consumer financial regulations associated with payments, which are immense, then doing that through either an FDIC or OCC related charter element, give you a national presence, particularly at the OCC, and that lowers compliance costs for some of those payment entities than they have if they were just money services businesses, state by state, without a federal charter. And I think the Fed for several years has thought through this issue of a narrow Fed bank account, which does not mean 13D authority for the safety net or any of that. It's purely a flow of funds issue. And is that a good thing or a bad thing? And that's what the Fed is considering. And they, as you say, they've given a conditional yes on that. And all that could lead to a federal payments license, which would be for bank and non-banks under, again, a similar set of rules. And I think you'll see our committee take up that as a topic for a hearing. I think you saw as the Biden administration exited, stage left, Nellie Lang, the Undersecretary for Treasury, gave a long, very interesting speech about the need for a national payments license before she went back to Brookings. So I think this is sort of where that conversation's going. And again, I'll repeat, to be inside that system under that rule and oversight, I think makes contributes to trust and safety in the device, in the ecosystem. But it speaks to just what my friend from South Carolina said, is this is why we have to get it right, and we have to get our market structure bill passed so that all this has the right environment to innovate and expand and keep that business, here in the U.S.
So you gave a little teaser of what might be next in House Financial Services when it comes to crypto, but maybe Rep. Timmons can expand. Beyond clarity, what else can we expect? We saw the tokenization hearing, and I think it was your most watched ever, someone told me?
I've been working on tokenization for a while now.
Yeah.
I'd hoped that we could include it in one of the bills, but it has to go through Energy and Commerce as well, which is just it's already a heavy lift. Including Energy and Commerce would be very difficult. So I think that's next. I think there's a number of different legislative proposals that we're going to be considering, because we just have to layer on all of this other regulatory certainty that's necessary for the innovation to occur, but also for the investment to occur. It's hard to raise money if you don't know the law. It's hard to raise money for your business. It's hard to invest and expand if you have the uncertainty that we currently have. So again, that's why we have to get it right, and we're going to start with Genius and Clarity, and we're going to get that right, and then we're going to layer additional legislative proposals on top of that as we can agree to.
And I believe, so if you win in the midterms, this will be your last run? Yeah. You don't like it, huh?
10 years was plenty. I had a full head of hair when I got elected.
And Chairman Hill, if you win again in November, you plan to serve another full 2 years?
I do.
Okay.
Look forward to being chairman of the House Financial Services Committee next January and continuing this work. And I think some of those themes William has touched on. He's been such a great leader on our committee, and particularly on this topic. He's been a very active contributor to our debates and in passing our stable bill out of committee and also getting clarity out of committee, and appreciate your consistent leadership. Tokenization is an important issue, and that's why we did our full committee hearing. We've done a lot of roundtables and staff and member education on it. And what I like about it is, 2 years ago, people were talking about tokenization, and, it was some fairly small groups of people doing specialty things and thinking about it in the context of their own business. And you flash forward to today, and as we approach this summer of 2026, our semi-quincentennial summer as an independent nation, everybody's talking about tokenization, and not just in the securities market, but as you point out, in non-security applications too. And I want to do a series of hearings. We've already had one, and I think what Paul Atkins, who you'll hear from in just a few minutes, and Chairman Seelig noted, is working collaboratively. We can look and see in tokenization what do we need to do in education of members? What do we need to do in education of the regulatory system? What do we need to do, if anything, legislatively vis-a-vis actually a law modification compared to just making sure that we have clear, collaborative, harmonized approaches in our two principal regulatory elements? So I think that's going to be a really excellent theme. And then William and I have a great colleague, Max Miller, who is working on House Ways and Means to try to also have the mirror collaboration on clarity from a tax point of view on holding and using digital assets, which I think is very important. Cynthia Lummis also has been a leader on that in the Senate. So we can't predict the track of how Ways and Means is working or not working on it. I do think that's another area that we need to have legislative agreement on and move forward as well. I think that too will add to the innovation push and the holding this innovation in the U.S. push.
Great. Before we go to audience Q&A, I have one more question for you, Chairman Hill. It might be a little spicy, so don't get mad at me. But say the House does turn blue in November, then what does a Maxine Waters-led House Financial Services Committee look like for crypto?
Well, let's give then Chair Waters a little credit during the Libra experiment at Facebook and the collapse of FTX and the meme stock craze. Those were all events that took place under her chairmanship, if my memory is right. And her staff is experienced in this topic. And then don't forget her members are, as you heard Senator Haggerty say today, it's kind of 50-50 over there. And there are pro-innovation, pro-digital assets ecosystem, market structure, dollar-backed stablecoin, privacy, all the things we've talked about today, Democrats. And I think they will be empowered to argue in their caucuses, their private meetings with Mrs. Waters, that this is an important thing to get right for the country. And I don't know how Chris feels, but I mean, I've seen Mrs. Waters move to that positioning to some degree compared to 5 years ago or at the beginning of the Biden administration when Chairman Gensler at the SEC almost, it was my impression that whatever his press release was the position of the Democrats on the committee. But over that 4 years, as again, William talked about, and you heard in the previous panels this morning, all that changed. So I don't automatically think it would be a zero at all. I just, I'm not there. I want to be the chairman, and I want to be the one to deliver that product because I think we have good solutions and we can do it in a very straightforward way. But do you feel differently about that?
Yeah, you've observed it. I don't. I'm going to clarify. I don't think that the Democrats are 50% pro-innovation and 50% anti-innovation. I think that the 50% that are not supporting these efforts would prefer to use these legislative opportunities to do what they always do, to try to reshape society and their perfect worldview, to try to address perceived inequities, racial, socioeconomic, to be every American's second mother. I always joke, I have one, she's plenty. They want to protect everybody from themselves and from everyone. And so I think if there were to be a transition, which I don't think there will, I think that the only thing that would change would be some weird stuff surrounding consumer protections and some sort of additional standard Maxine Waters add-ons that just make no sense, but we stomach them to get the job done. But I don't think that's going to happen because we're going to win the midterms.
All right, and with that, we're going to go to audience Q&A.
We answered all of your questions. Great.
Oh, Chris? So if there are changes in where the bill is now, where would be the most likely, when you're trying to sort of steer all these different personalities and sort of get things through, are there any areas where you're sort of anticipating a higher likelihood of change in order to get, everything across the line? Or is it really the sense of like, look, we just have to, we have to move what we have to move and sort of succeed on every front? Are there certain kinds of lines where maybe you or your members are sort of strategically thinking, given the time that's available, let's figure out what's necessary politically to get to an outcome, or is it really just an effort on every element? I'm just kind of curious in terms of as the days go by, like what's your thinking from a leadership standpoint?
I believe that the Senate has worked hard to align in some of the definitional issues between clarity and the Senate version, and that's very important. It's also important that I think from a commodity and a securities point of view that those be in alignment as well. So that would be a substantive thing we'd want to just how did it turn out, right? You know, because it's not over till it's over. Secondly, of course, we want the digital ecosystem to have a satisfactory outcome on this stablecoin yield issue, which we did not confront quite as vociferously in the House debate. On decentralized finance protocols, and I think we could have some problems in the House if there was too much, as you point out, sort of a nanny state approach to how one can use a self-custody digital wallet. So I would reserve judgment and just say that just has to be, we need to see it. But I think those are some of the key areas. And then obviously we think the CFTC needs the right budget authority, which is in the HR Clarity Act. And we'd like to see our changes to the Genius Act that we proposed in the House Clarity Act, and just remind senators that we didn't draft those idly. So those are some things. What do you think about when you think about bringing that bill back to the House?
I'm going to take this from a different perspective, just from the process. So if you asked me 8 months ago, I would have told you, I told everybody that I thought that we'd be done by now, that we would have had market structure passed. So what happened? Well, the Democrats shut the government down for a month and a half over healthcare subsidies. And then we have major combat operations in Iran. We're in another shutdown of DHS over ICE funding. So I think that the White House is doing so much. Like, it has been exhausting the last 16, 17 months. The speed at which they are engaging on every single front is honestly kind of exhausting, but it's impressive to watch. So I would say that this is going to happen, and once the plate is somewhat cleared up from the White House, they're going to start pushing hard again. And I think, for better or worse, they've also learned a couple of lessons here and there. I mean, the housing bill that's been worked on for a very long time, that's maybe exhibit A of what not to do here. Don't put something in there that's going to make it unpalatable for the House and put everybody into a really weird spot. And I think the leadership at the White House is going to be very much involved in this process, and we're not going to see that that outcome, because this is extremely important to the president. It is extremely important to the president that this gets done, and so I am confident it will get done, and it'll get done sooner rather than later. But while it is a very high priority, there's a lot of priorities. So
I just would add one other final comment on that. And to say that you've got to recognize that since we passed the bill in last July, and the Senate commissioned their project, which was thrown off completely by the Schumer shutdown last October, that I can't compliment enough David Sachs and Patrick Witt and their ability to work with senators on behalf of President Trump and keep the House engaged as well. They've really done some excellent shuttle diplomacy between the two chambers and between the two parties in the Senate, and I don't have enough, positive things to say about what I think, in my judgment, looking from the outside. I'm not in the Senate in those meetings, but I see a real effort to be an effective and honest broker in getting this done. So, thanks.
Chairman and Congressman, first off, thank you for your efforts from the start of this Congress. You've been stalwart this right out of the gates and have kept it going. And absolutely David Sachs and Patrick Witt, and before him Bo Hines, have been important, but your steadfastness on this has been critically important. In your bill, there is, I believe, a very important provision that requires the CFTC to maintain and reconstitute Lab CFTC, and for the SEC to have its own innovation center. And in my experience, those centers were really important for innovators to be able to come to the agency and say, here's what we're doing. It's unorthodox. It hasn't been done before. What do you think? Where are the hiccups? And they could meet with people in the agencies that themselves were tech savvy And they were not part of the enforcement group or others that would look at that and say, well, we're going to sue you for this. And we really saw that during the Gensler years how the lack of such an office at the SEC was really problematic. Unfortunately, the Senate bill doesn't contain companion language, and I just want to say it would be wonderful if, when that legislation comes back to your side, if your approach to that could prevail and both agencies could be required to have innovation labs at the SEC and the CFTC. So if we go back, unfortunately, to what we've had in the last few years, those innovation offices will remain.
Well, I couldn't agree more, and I thank McHenry working hard during his chairmanship to make sure that every agency in our oversight in the House Financial Services Committee all had an innovation office, an ability to have a sandbox approach for both technologists that were looking at AI, blockchain, banking as a service, partnerships where you could go get this kind of hands-on advice. So I'll certainly support that and invite everybody here, if you like that idea, to be in touch with your favorite United States Senator to include it.
Thanks. So title of this event is Digital Assets and Emerging Tech, and you touched on it a little bit. Do you have a sense of any AI legislation that the committee is looking to work on in either this year or in the future?
Yeah, you know, one thing, last year, you may recall Hakeem Jeffries and Mike Johnson convened a house-wide AI task force to look at it across all 12 committees and look at it across all the industry groups. This was sort of a counter to the approach that Senator Schumer had taken in the last Congress, which was maybe a more prescriptive type approach. And it was a strong bipartisan group. And they came away saying this is changing so fast, any recommendation that we would make would be, surpassed by the technology before it was ever implemented. So it's whatever we do ought to be principles-based. And in the roundtables that we've done in our committee and the hearings we've done in our committee, and Brian Stiles doing a great job leading that effort for House Financial Services Committee, we've tried to say whether you're using it for compliance purposes or onboarding new customers or compliance oversight or fraud prevention, good for you. And you just need to be able to show your work and do that in compliance with federal law. And that's why I support, again, this same concept, which is of an innovation hub or a sandbox. Mike Rounds and I have the AI sandbox bill to get all the bank supervisors and security supervisors to let people come in and structure a machine learning experience. I think the regulatory agencies benefited from it most of all as the private sector looks to see how they would enhance either customer service or back of the house services with AI.
I like analogies. Should we create a preemptive framework for cybersecurity and privacy for the entire U.S. economy, similar to GDPR, and not have California, New York, all these different states create a patchwork framework that would cause a burden for businesses? I mean, it's just ridiculous. Should we do that? Yes. Are we going to? No. But we can be ready for when we have to. For the cybersecurity argument, I thought that we were going to get there when the Colonial Pipeline attack happened, and we basically ran out of gas in my district. 85% of the gas stations had no gas. They were, I don't know if you all remember this, but there was a Eastern European organized hack of the operating system for Colonial Pipeline, and it was hugely disruptive. They finally figured out how to get it back online at the very last second. But, I mean, we're going to have something bad happen in order for us to do something on cybersecurity, privacy, or on AI. And I think the risk of doing the wrong thing is probably worse than doing nothing. So we'll just try to get ready for when we actually have to do something. I don't like that answer any more than you do, but that's how I view it.
I'll give you one other comment on that, which is I think you saw last summer where David Sachs worked during the House budget reconciliation process to suggest a 10-year moratorium on state laws affecting AI regulation, and that, the House didn't go along with that. But this this brings up the subject from the administration's point of view of how about working with the National Governors Association on best practices on what is a federal lane and a state lane here in the interim. I mean, how can we make sure that we're able to commercially advance this technology? Because just like the subject on the internet in the 90s or blockchain today, Web3 is a global system, and AI, there's nothing more interstate commerce than, machine learning on artificial intelligence. And so I've seen the polling. The polling is very, cautionary about building data centers or using AI, and consumers don't know what to think about it. And so that's why I think William may be right that it'd be hard to legislate in that kind of environment, but I still think the president, my recommendation would be that the president's science advisor and his AI advisor get a nationwide type meeting where we can bring some people all in alignment in the governors and the legislatures, or you're going to get a really crazy quilt that you used to see in food labeling or in other state federal controversies.
One more thing to that. So the biggest challenge for either AI or cybersecurity would be the number of committees of jurisdiction. So getting these bills through ag and financial services has been very difficult, and we don't really use these muscles a lot. Congress isn't very good at legislating. So, I mean, it has been a Herculean effort, and I mean, the leader, or Chairman McHenry, now Chairman Hill, have both done incredible work to get us where we are, but to expand to another 2 or 3 different committees would just be, it would be very difficult. And the cybersecurity bill that we should pass would go through at least 9, probably 13 committees in the House, and it would go through at least 5, if not 7 committees in the Senate. So if we were going to do something about this, a joint select committee from the House and the Senate would be the way that I would propose doing that, but that involves all of the different committees of jurisdiction giving up influence, and that'll never happen. So again, not optimistic.